All right, another great article that someone had sent to me. You guys do a great job of keeping me abreast of the various articles that are out there. This is from Physician, Financial Literacy for Docs. Premium ACA tax credits or Roth conversions. So let's read. Whoa! Oh my God, we just went poop. Come on up. We just gave you food. We were just out in the, it was raining. Old Poopy Pablo needed to go poop, so I took him out there. And he's still growling at me. All right, remember to paw the like button. I gotta paw the button for Pablo. Um, this is a tough one, the ACA premium credits, because well, let's just read this article. I haven't read it yet, so I'm looking forward to we'll all learn together. With Pablo will tell us what's going on. By the way, we bought a little fish. What are those little fish called? Um, he died last night. Oh, boy, Pablo didn't eat him, but so I think we'll just have one pet. This guy here. Healthcare is perhaps the most difficult decision in early retirement. Healthcare insurance is expensive, yet the risk of inadequate coverage is potentially devastating. For a early retiree who has a healthy tax planning window, it's not death and taxes that need to be considered, it's healthcare and taxes, and then death. I agree. One interesting option is for healthcare and retirement is an ACA, Affordable Care Act, Obamacare, with a premium tax credits to offset the cost. Let's consider who should go for premium credits and who should pay full price. All right, well, we got a bunch of table of contents in here. So how long is this article? Wow. All right, we're not gonna read the whole thing because I'll go bored. But in case one, go for premium ACA credits. You got 3 million assets, $1 million in each brokerage, IRA, and Roth. You live a frugal life, and you actively donate to charity. All right, so we're gonna talk about that guy, Mr. and Mrs. Credit. All right, they're retiring at 60. Case two, go for Roth conversions. All right, they're a Mr. and Mrs. conversion. 60, 5 million assets, 1.5 million brokers, 3.5 million IRA, downsizing, maximize legacy to children, including one with special needs. All right. Consider considerations for healthcare and early retirement, ACA credits. If you keep your income less than 400% of the poverty limit in your state, you may be eligible for premium ACA credits. With these tax credits, the IRS actually pays part of your premiums directly to the insurance company. That's not fascistic. No, nothing fascist about that. At the end of the year, you had better stay below the magical Maggie number because it's a cliff penalty. If you're a single dollar above the cliff, you owe the IRS. I gotta do some copyright here, brother. All the money you paid in on your behalf to the insurance company. The credits think it'll be good for them. They have lots of money in their Roth accounts due to their near continuous Roth IRAs and some IRA Roth conversions while working. In addition, they have access to high basis index funds. Okay, think and gas. They can use the Roth money for living expenses as well. I completely agree with that. So I just want to go back to here. Basically, what he's saying is, look, live off your Roth IRA to get the ACA credits. I got no qualm with that. I mean, we didn't make the rules. Them's the rules. We're just living by them. So he's saying use your high cost basis index funds or your Roth, live off the credits, and then once you hit Medicare, then you can start doing Roth conversions. Makes sense to me, man. I'm all about that. Or they can get a reverse mortgage. Yeah, reverse mortgages are for the wealthy too. Right on. Considerations for healthcare and early retirement Roth conversions. The conversions have other priorities. They live modestly and want to leave behind as much money as they can for their 4 kids. While they have plenty of resources, they are considering the ACA credits because health insurance is expected to cost them about $26,000 a year. To see their magic Maggie number that's modified adjusted gross income and easily they see their Maggie and they can easily get there. They can pull out just enough from their IRA to fill up their standard deduction and the 10% tax bracket and still do about $20,000 a year in Roth conversions. Will that help them save tax over their entire lives? Let's see. The Maggie is important to consider when you're looking for IRMA and premium ACA credits. And IRMA is your income with respect to Medicare Adjustments Act or something like that. It's the premiums, the increase in premiums you pay if you make too much money once you're on Medicare. Your Maggie is your AGI plus modifications. All right. The tax planning window. All right. Oh, look, it looks like he's using. Yeah, look at that. He's using right capital. This guy right there. All right, cool. All right. So using right capital. Okay. For age 60 to 70, they have standard deduction. This is starting to bore me now. Let's see. Factors to determine. Okay, here we go. Factors to determine if you should go for the premium tax credits or do Roth conversions. Income sources. Remember, to qualify for ACA tax credits, you need to keep your income low. If you're taking Social Security income or have pensions or other sources of income, that might be difficult. Also, capital gains and qualified dividends count against you in the MAGI calculation. Tax diversification retirement accounts. If you have good tax diversification by having lots of Roth and no legacy goals for Roth money, you can use this money for your living expenses, and then you can get the credits as well. I agree with that. Roth money is tax-free. Other sources of tax-free income include reverse mortgages, cash value permanent life insurance, high basis assets. Yeah, good stuff, man. Goals. If you want to leave a legacy to your heirs, Roth conversions are indicated. Roth conversions are indicated. Okay. If you are leaving money for charities, you might as well give your money pre-tax. Okay. Yeah. Okay. That's a tough article to read there. Who are these people? It's kind of sloppy, man. Look, I'm not saying I don't have sloppy articles, but who are these people? I don't know who they are. I'm not trying to bash them. I know they're using Right Capital, which I'm keen on. Expert witness for legal matters related to COVID-19. Wow. Okay. Content, but they don't. Oh, here we go. So we got this guy. He's okay. David Graham is a medical doctor in Billings. All right. Advice only for financial planning physicians. All right. I wonder if he actually wrote that article. The only reason I say it is because I do know people hire out some of these content creators, which I don't, but I get it. I get it. Let's see. Expert witness. Okay, that's pretty cool. We'll see what there's talk about fees. What is not good? Are you a, how do you get paid? There we go. How do you get paid? No commissions, no sales of products. All right, but you're not. Are you a CFP? All right. Okay. So, how much do you charge, man? All right. All right. I don't. Are you the only fiduciary planner? Why don't people just say how much they look? I got no qualm with this guy. Nothing wrong. I'm just the article is a little bit sloppy in my opinion. I'd like it to be a little bit tightened up, frankly. He's a practicing infectious disease physician in Billings. He discovered the financial independence movement mid-career for the first time in his life. He discovered the why behind personal finance. All right. His revelation led to an early transition. Okay, so he's talking about physicians get a late start to finances. Yeah, awesome. All right, good. So, all right, if I had 9 hours to cut down a tree, I would spend 6 sharpening my axe. COVID book. All right, let's take a look here. What the hell? From killer to common cold, herb protection, the transitional phase of COVID-19. All right, but all right, so there you go. I'll put a link in the show notes. I mean, I don't know anything about this guy, and I like his premise that you can get your. Sorry about the light behind me. I haven't turned the table around. I like the premise that if you're looking for Roth conversions relative to ACA, it really depends on where your income's coming from. Mike, that's a tough one. And if you have pensions and stuff, it's awful hard because you're already at the lower end of the 12%. I mean, the higher end of the 12% tax bracket a lot of times. But anyway, I think it makes sense to look at what is my overall income and from where is it coming. I think that makes sense. So it's a pretty good article. I'll link to the show notes and maybe follow this guy. All right, we'll see you guys.